Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar pushes higher midweek while the US dollar index slips towards a one-week low around 99.5 after softer US dollar boosted expectations of a December Fed cut. Retail sales and core wholesale prices missed forecasts. Consumer confidence unexpectedly fell as well, and the ADP's weekly payroll estimates remained in contraction, shifting focus to the jobless claims and durable goods next. At home, Australia's CPI ticks up this week from the release to 3.8%, driven by housing and food, keeping pressure on household budgets and leaving the RBA firmly on watch as inflation remains above its 2 to 3% target. US markets will be closed on Thursday for Thanksgiving, so no doubt liquidity may be on the weaker side of thin, so do be aware and keep your positions accordingly to your risk management, as we may see a little bit of whips or this price action in some of the currencies. Looking to the technicals though, they are firm for the Australian dollar and now looking towards 65.5 to around 66 cents. Be on your guard there, as there was good profit taking there and it may be witnessed again. Moving to the euro, as I mentioned, the dollar slipping to a one-week low. All eyes will be on the top side target around 116.5 to 117. Speculations that Kevin Hassett could replace Chair Fed Powell, which has added further pressure to the dollar, with reinforcing speculations of a Fed cut early in 2026, while the ECB holds steady. So with this Thursday's Thanksgiving, the market's likely to be a little bit on the thinner side, or maybe even quiet, but still keep an eye on some of these technicals. Any pullback likely to find support around 115.45. A weaker play coming into dollar yen, as traders still remain fearful that the Bank of Japan could intervene, and if so, could send the market tumbling further where it is to around 154.8090. A key point there is a break will expose further risk down to 152. In light of the weak technicals, especially with the MACD as well, I am in favour of this market eventually breaking lower. Sterling very strong since the break of this trend and still holds its momentum and therefore looks towards the region close to around 133.20 as a potential target. Keep an eye there in case profit taking emerges, but failing that, could see the rally extending on to 133.70. Any pullback to be shallow. Wrapping up with commodities, well, as we can see, this pattern here still holds firm, and with much talk now in the market that we could eventually reach a target around 4,500. In the short term, though, I'm looking up towards 4,173 to 77, maybe on to 4,200, and reassess from there. Any pullback? Well, keep an eye on this trend. Support is seen around 4,158. The trend support, we can see, comes in close towards the region of 4,040.50. Put in the distance some way away, but nevertheless, the way these markets have fallen, could easily reach there. But overall, though, with technicals firming, could see the gains increase. Wrapping up with oil, a whipsaw price action, but overall keeping my view to a bullish case, that is towards 60.5 as a potential target. And first of all, we're going to clear this level around 59, 60, 70. But there's still a little bit more in terms of technicals to support this rally. So therefore, any pullback should be shallow. And let's see how we play into today. Well, that's a wrap. Thank you for joining me. As always, look out the interest report, and I hope you enjoy the great start to the day.